essentially offers a homeowner, a prospective homeowner, an opportunity to eliminate up to $40,000 worth of their student loan debt at the same time they close on their home. So here's how it works.
Thank you, Rich, for joining us today. Today, I want to talk about your Smart Buy program. I've heard a lot about it. I want to use this as an opportunity to share, this opportunity with some of my clients and whoever is going to benefit for this program. So what is the Smart Buy program?
Perfect. So thank you again, Patrick, for having me on your podcast. It's great to be here. So my name is Rich Kimball. I'm with CrossCountry Mortgage, and probably the hottest product right now in the Chicagoland area is the Smart Buy program. This program is provided by the Illinois Housing Development Authority. The Smart Buy program essentially offers a homeowner, a prospective homeowner, an opportunity to eliminate up to $40,000 worth of their student loan debt at the same time they close on their home. So here's how it works. With the Smart Buy program, if the buyer has student loan debt, a minimum of $1,000 up to $40,000, and it's not Parent Plus programs, it's truly their own student loan debt, then they can get a grant at the table when they buy their home that will eliminate that student loan debt. So additionally, the program includes a $5,000 down payment assistance. So you get $5,000 in down payment, which you don't have to use if you don't want to, and the $40,000 of student loan debt forgiveness. And it's not necessarily forgiveness; it's really a credit that's sent right to the closing that the title company will then take those funds and directly pay those student loans off. Now, there's a couple of caveats to it. The biggest one is the maximum payout or benefit to the home buyer is $40,000. So here's the challenge. All of that home buyer student debt must be paid in full at the time of closing. We do have some clients that obviously have more than $40,000 in student loan debt, and you can't get the 40 unless everything's paid at the time of closing. So here's what we've already had happen. We've had situations where client student loan debt was $58,000. They got a gift from a relative for the other $18,000.
I see.
You got a gift coming into the closing for 18. You got the grant money coming in at 40. Loan are all done. And the best part about it is you get keys to a house.
So can you still hear me?
I hear you just fine. Yeah.
Okay. Sorry, Siri came back on. So what about individuals that are? So what about couples that are buying homes? Right? Are they going to look at it as each individual, or that 40,000 is going to apply to that household?
Yeah, the 40,000. So if you've got one buyer that has student loan debt of 20,000, another buyer that has student loan debt of 15,000, we can provide the funds to eliminate that student loan debt. Now, interestingly enough, let's say both buyers had student loan debt, as I just gave an example. One was at 40,000 and the other one was at 5,000. We could still use the benefit for the one borrower at 40,000. So we can clear their stuff up and ignore the other student loan debt for the other borrower. So there's definitely some flexibility with the program. As long as we eliminate all the debt on that single borrower, we're
okay. Now, I do understand the program as an expiration, right? It's not for the entire year, right?
So these funds come from the federal government. They were given to the state housing agency, and then the state housing agency puts that out. The estimation from the state housing agency was they believe they'll help 600 families over a 6-month period. Now, the program kind of came out at a weird time of the year. It came out December 1st of 2024 with the announcement days before Thanksgiving. So it was kind of subtly brought into the market.
Right.
So we did have December when we've closed already 2 of these, and we're in mid-January right now. Our estimation is that the state will be out of these funds probably by the end of May.
Okay.
And buyers that are thinking about doing anything prior to that, or maybe even a buyer that was thinking about doing something in the summer, may want to move their timetable forward to take advantage of these benefits.
Okay. And I'm guessing this is just for residential mortgages, right?
Just for residential mortgages.
Okay. Now, is income going to be one of the factors that will determine the eligibility?
Yeah, there will be an income. The Illinois Housing Development Authority does have an income restriction on it.
Okay.
I believe currently that sits at about 100. It's either 135,000 or 144,000. I apologize for not having the exact number.
No, that's fine. So, and this is for an individual or for a couple?
That's for just the borrowers. So
the borrowers.
Yeah, if you have 2 borrowers on, that income limit's going to apply to both of them combined.
Okay, so it's not double if it's double if it's a couple, right?
Correct.
Okay. Now, how about credit score and I guess debt to income ratio?
Sure. No, perfect question. So for this program, the credit score minimum is 640. So
okay.
Both borrowers, if there's 2 borrowers, the minimum credit score between the minimum average credit score should be about 640. And then the debt to income ratio on this is 45%. Now, 45%. The good news is we're going to be paying off a bunch of student loan debt they have. So that should help qualify more people.
Right. So this is interesting. So you did mention earlier that with the program, the applicant has an option to either go with the student loan debt relief part of it, or just the $5,000 credit towards closing down payment, right? Based on their needs.
Right. I mean, if they choose just to take the student loan debt forgiveness and they already have their down payment assistance, then they can do that. Just take the student loan debt and skip the $5,000. We have had a client do that. As far as that's concerned, otherwise, the housing authority does have some other specific down payment assistance programs, but they're not part of the Smart Buy. The Smart Buy has $5,000 that the client can get towards their closing costs and down payment, not part of the student loan portion of it.
Right. So I guess, Rich, what I'm trying to clarify is the individual can choose to take advantage of both of them or just one of them.
Correct. Yeah. Ultimately.
Okay. Okay. And this is going to be for, I'm guessing, a 30-year fixed rate mortgages alone,
correct.
Right?
Yep.
Okay. So for anyone who may be interested or who may qualify for such a program, how do they get a hold of your team, or what is the process?
Yeah, perfect. We do have a hotline number at 847-603-2300. It rings the entire team's phones. So as an example, when I'm here doing this podcast, if somebody were to call that number, somebody on my team will pick that up, try to avoid having them go to voicemail, and take care of them immediately.
Okay, great. So before we end, I know I've asked a few questions, and these are questions that just came into mind.
Sure.
Since you've started working with other people, what are some of the questions that they've had, or challenges, or things that you found out that you think when you share with my listeners, they may also benefit? Because I don't want to skip any question that someone might have that I haven't been able to ask.
Yeah, no, those are great. I think the biggest clarifications really, or the biggest misunderstanding sometimes with the program, we'll get somebody that comes to us and they have $120,000 of student loan debt and they'd like to
Okay.
take advantage, but unfortunately, because the
Mm-hmm.
program requires all of their debt be settled at the time of closing, they just don't
Okay.
have that opportunity to do that. So
Okay.
that's definitely one. The second one is the Parent Plus loans. So the Parent Plus loans are excluded from the program. So if they've got situations where the Parent Plus loans were taken for the student loan debt, they're not going to be part of what we're doing here just by design in the program. And then
So
go ahead.
I didn't mean to cut you. You did mention the Parent Plus loans, right? This is
Yeah.
the second time you've mentioned it. Can you tell us what those loans are?
Yeah, now I'm not a student loan expert, so you guys will
Okay.
have to bear with me. I do
Mm-hmm.
believe that these are loans that are actually the parents are, well, I know that they're part of the signer and part of the obligation. So the parents are involved in those loans. This
Oh, okay.
program,
Okay.
yeah,
Yeah.
this
So
program,
basically, student loans that the applicant had their parents co-sign for them to get those loans. Okay.
correct.
Okay. I get it. Okay.
Now, the last thing that we get that comes up is people go, well, darn it, my kid just closed. Can we use the program for a refinance? The answer to that question is no.
Okay.
You can only use it to purchase.
Okay. 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 That's good to know. Thank you, Rich, so much for this information, and I'm hoping that at least one listener or one viewer of this video will be able to benefit from it. Thank you so much.
That'd be great. Thank you very much
Okay.
for letting us get the message.